Louise Bedford here from the Mind Over Markets segment. This is how traders think. Now, Jordan Meller, you are joining me today. You don't even know that I'm going to discuss the research that traders need to use to excel in the markets. So are you feeling suitable guinea pig-like?
As always, Louise. No, you got me. You got me. We need to know this research, so I need to find out.
We do, we do. And look, I think the lovely thing is that there is so much research about elite performance. Now, it can be implemented so easily into our lives and into our trading screen. So it's always good to be able to discuss these things with you, Jordan. So the first piece of research that I'd like to introduce you to is deciding versus sliding. Now, let me tell you a little bit about how this research came about. It's fairly new research, actually. It's 2013 research by Stanley Scott into the happiest couples. So we are talking about something that can impact people's relationship here. Now, the concept is, and I'm going to simplify it right down, they've done a lot more than this, but when you come to a crossroad, you can either continue straight ahead and not give it another thought because that's the direction you were going in anyway. You'll just slide into that process because you were heading there. Or you can choose to take a sharp right or left turn. Now, that is a decision. That deciding versus sliding. So let's think about when a couple is thinking of living together. Now, I know that you have just moved, Jordan, and your own personal circumstance already tells me which one you are in the continuum of deciding versus sliding, but I will still go through this process anyway because some people will be able to apply this to their own relationship. So when a couple is thinking of living together, there are two ways they could go. They could either discuss the decision, think about the implications, talk about how they both feel about the move. Maybe they could even think into the future. Are we going to stay together? What's going to happen if we split? Are we going to have children? And if not, why not? Where is somebody being inconvenienced versus where is somebody benefiting? That decision is that framework. But then the other type of framework is, and this is actually, I'm going to be very personal here, and this is what happened with me and my husband. We didn't do that. All of a sudden, I noticed that one of my drawers didn't have my stuff in it anymore. It had his stuff in it. And there was a toothbrush extra in the bathroom. And then it was like, oh, he's over here for 3 nights a week. Are we just sliding into living together? And it dawned on me that we were. We sort of just slid into being together without discussing. So what happened at that moment was a really quite aggressive fight, and I initiated that fight. And I'm like, what's our future? Do you want to get married? And etc. It was quite, if you had been a fly on a wall, you would have been quite amused at how vitriolic I became, Jordan. So in your own circumstance, I know this is very, very personal, but I do also know the result. Do you consider you and your partner to be more of a decider or more of a slider?
It's funny. I know from the outside and what you've seen, you're going to assume one way, and I'll explain
I
that thought.
am.
But I think there's a bit of both. Funny
Okay.
enough, I think there's elements of our relationship which we definitely just slid into, and not. But the main decision points we are deciders. What Louise is alluring to there. We recently made the decision to move completely city to the other side of the country because my partner had a job, and that was a process of sitting down, being like, okay, what's the benefits? What's the negatives? What's the plans? Where are we going? Why are we going? What are we spending? Everything along those lines. So yeah, I'm definitely more on the decision point. I think my partner's definitely more on the decision point. There's definitely things where we just slide in. We're not complaining. We like it. But on big decisions, definitely decisions.
Yeah, interesting. So let's think of how we can apply this as a trader, because that's what we're here for as well. Taking research from another area and applying it to our own mind as traders and as investors. So firstly, as a trader, we need to not just go with the flow. We need to actually think what we're doing and to decide. So I think we can agree on that. So do you decide to follow your trading plan, or do you just slide into a decision based on gut feel? That could
No.
be a query.
Oh, sorry. I thought that was a question for me.
No, I know
Yeah.
what your
Sorry,
answer
carry
is for
on.
that. Do you decide to trade a small group of certain markets, or do you decide to slide into trading the latest thing? Everybody's talking about crypto. I'd better trade crypto. I'll just slide into that decision. Things that you can decide on or that you can slide into. Do you decide when it is appropriate to exit your job, or do you just quit in a blaze of glory and slide into trading full time without realizing the implications? These types of decisions can make or break you as a trader, but more importantly, they can make or break you as a person, because every single one of those from the markets can actually have a ripple effect out into the rest of your life. So I'd love to hear your thoughts there. Have you seen people who are traders make specific decisions, and have you seen others slide? And what has happened to those traders, Jordan? Has the decider of that equation been a more successful trader in your view?
Yes, 1,000 times over. Yes. So I find this is kind of it falls in specifically when we're talking about trading. I'm going to focus on one area, and it's when exiting positions. Okay, deciding and sliding, because a lot of people will see the P&L, a lot of people will see the outcome, and that they could realize that profit very quickly. So it's a very emotional decision where if they were to decide on why they're exiting this position, it wouldn't be the right decision. You could hold on a little bit longer. It's not part of the plan. And that's one key area I like to focus on, because it's a key area I resonate with, but I also see every day with traders. And by far, the ones that decide, the ones that go through their process and say, hey, this is the right area to exit and then get out, are a lot more better off than the ones that are either sitting there and hoping or getting out because the P&L looks nice.
Yes. And this is not necessarily a personality trait. This isn't something that you're born with. This can be the most laid back person in the entire world, can still be a decider. So this isn't an aspect that you can't develop either. As long as you become aware of this, it is something that you can train yourself into. So I don't think of yourself as a particular type of person in this respect. It is a circumstance that you can alter, which I think is also important to note. So that's an interesting piece of research, isn't it? Because it's got
It is.
wide-ranging implications. Now, I'd like to take you through another piece of research, the California Jam Experiment. Jordan, have you heard of this one?
I have not. No.
I love this one. I love this one. So here we go. So I never got this job, but I did go for a job years and years ago when I was at uni to be one of those taste testers at a supermarket. And
Okay.
yeah. I thought it'd be so cool, but I didn't get the job. But just imagine that as the format for this experiment. So one taste tester is over one side of the supermarket, and another taste tester is in another, same matched for geography and variability of all the demographics, in another supermarket. One taste tester has got 24 jams in front of them. Oh, they're so pretty, lovely colours on the labels, lots of different varieties of jam. And then the other person in the other supermarket has 6 types of jam in front of them. So a smaller number of jams, same brand, same colourfulness, same level of activity in terms of the people coming past that tasting table. So knowing what you know about people, and this is quite interesting because it's not an obvious answer always. Do you think more jams sold with the 24 jams on display, or do you think more jams sold with the 6 jams on display, Jordan?
I'm going to take a wild swing at this. I'm going to go more sold with the 24.
Do you know what? Every marketing executive said exactly what you said, and they were wrong. So, up until then, taste testing had been a big, expansive, absorb everybody in the entirety of our range experience. Because every marketing executive said the more the better. What the California Jam experiment revealed is that people get confused, they get daunted, they take longer to make a decision. They stand in front of the jams with this perplexed look on their face, with their head on the side, going, which one will I choose? It was too much sensory input, too many decisions to make, too many things to say no to. And so they just walked away. They took a taste if it was offered to them after feeling quite daunted by it, and then they walked away and they didn't purchase. Now, this is why some of this research is good, because restricted methods, like just the 6, can lead to a better outcome. Now, how do we apply this as traders? And I'm going to give you perhaps some ideas, because this is interesting when it comes to search results. I was with a trader the other day. We had talked about their scan, and they deviated from the scan that I suggested, which only produced 8 results, because they said that's not enough choices. They ran their scan and they had 346 shares come up in their watch list. Now, knowing what we know from the California Jam experiment, what are your thoughts about that trader that had the 346 choices compared to the 8 possible choices, Jordan? How do you think that would have gone for them if that had have been where I left them?
Yeah, well, if we were to base our evidence off of that research, they're going to be overwhelmed. They're going to be overwhelmed and they're not going to know where to pull the trigger.
You got it. You got it. So the idea with your scan is not the more is merrier. The idea with your scan is to get it to weed out the things that you don't like. Get into a very narrow group of opportunities and just choose from those. Now, the other aspect that we could apply this to, I have another trader. She is quite an amazing intellectual. She's a lawyer by trade. She likes to trade every single market. I'm just going to say, in general, every single market. She's into ETFs, E-minis. Oh my God, I don't even know what an E-mini is. Of course, stocks and CFDs and a bit of this and a bit of that and a bit of this. And she tried to trade the Indian market, but because she didn't live in India, they didn't let her. And now she's applying for some sort of citizenship based on India, and so she can trade Indians markets. And I'm like, what are you doing, love? What are you doing? So the number of choices there perhaps is a problem, because her results are nowhere near as good as the person who I've also trained, same type of system, 3 markets, 1 time frame. His results are outstanding because he restricted his views. So have you seen traders perhaps suffer from over selection issues in markets?
Absolutely. I see it every day in the streams. I see it we get, I know a fair few people who have one asset, and that one asset only, and they day trade it every day, and they make a lot of money over the past 20 years. That's all they've done. And I see a lot of other people come through asking for analysis on just a range of different things, going, what is happening? What are we looking at here? Where does that cross correlate? So yeah, I see it all the time.
The other area that I think I see this in, and I'm not sure which indicators you use, Jordan, because we haven't gone into an indicator discussion, but with the momentum family of indicators, people love to put an RSI and an MACD histogram and, let's throw a CROC in there and a rate of change. Let's just bury the chart underneath all of the same family of indicators, which is momentum. Now, because those momentum indicators are all based on the same algorithm, they're going to suggest the same direction. Now, this is where looking for loopholes can be a problem for a trader. We're just going, we just really are looking for that confirmation bias. I do want to buy it. I think it'd be a great share to buy. It just seems like it'd be terrific. So I'm going to find that one piece of evidence to confirm that that's what I should do, and ignore all of the others that are suggesting the opposite. So careful with the number of indicators you're using, careful with the number of time frames you trade, and the number of instruments that you go for. So we're thinking in terms of diversification as well, but we are also restricting our view. I know, Jordan, we've talked before about looking at diversification, but we're not talking about spreading yourself so thin that you can't make effective decisions.
Yeah.
Okay, let's look at the next one, which I think is an amusing bias here. It's the Dunning-Kruger effect. Now, in a nutshell, this is when, I know this is a little cruel of me to summarise it in this way, I'll admit, but it's when people are too stupid to realise that they are stupid. So look, we've all known overconfident people who are completely unskilled. Now, I think in my last corporate position, which was, way back when, in the 90s, in the mid-90s, that's when I finished my job. The guy that got promoted over the top of me as a national manager, I was going to say his full name. His name was Frank, okay? He came from a competitor and they paid him a fortune to come over, just a fortune. He was a brainless clod. He knew nothing. Cannot believe he sucked them in for the salary that he organised for himself. He was too stupid to know he was stupid because he thought he was God's gift to the credit information industry. Now, it's a cognitive bias. It explains why people remain incompetent. Often people are promoted to their area of non-expertise. The terrific salesperson becomes the sales manager that can't manage for crud. So I think we've seen this. I think we've seen it in our, dare I say, politicians. I think we've seen it as perhaps in the American political landscape. Maybe we won't go into names here, but I think you know where I'm coming from. So in the markets, let's see if we can apply this, and then I'd love to hear your thoughts, Jordan. Those that are overconfident end up overtrading. They think they are God's gift to the market. So why not put themselves out there in as many places as they can? And of course, that can lead to devastation. We know that overtrading leads to a lower rate of return, and certainly it leads to a higher rate of burnout because you haven't restricted yourself in terms of your views, and that can actually play havoc with your reticular activating system. Your attention is all over the place. So here's where I'm coming to, and this is my crescendo for this evidence, okay, because I have to relate it to the trading world. If you are experiencing self-doubt, you are on the right track. I'm going with that. So what are your thoughts with that?
I like hearing that. Because I sometimes get self-doubt because sometimes I'm fearful that I become that overconfident person. So I'm welcoming that. It might be falling on deaf ears, but that to me is good. I think the retail world is very full of ego. And a lot of people hate being wrong, and especially in this game, they cannot stand, at least in the public image, to be wrong. So a lot of people are being taught and seeing the guys with higher influence and the way they conduct themselves in almost certainty in what they say and where they make money and different things like that allows or builds up this feeling inside people that if you're not 100% certain, it's not the right thing to be doing. You have to be there. And I think that leads to, as you said, overtrading, not only overtrading, but also over leveraging, over risking. I think it adds a lot of this self-confidence that shouldn't be there based on research, based on data. And it can make you kind of form a character which isn't real and then bet on that character essentially, which obviously is not a real character, which can lead to some pain. So I think it's an important thing to be wary of.
Yeah, I do too. Look, this is very wide reaching in terms of its implications. I love the Dunning-Kruger effect because I see it every single day when you listen to other people's ads. Now, we're not going to name names, of course, because there are competitors of yours, Jordan, and of mine that we won't actually give airtime to. But if you've got somebody who represents that very confident view, we know from a fund management point of view, they attract more money. They do. However, when you actually chart confidence versus fund manager performance, the two are inversely correlated. So there are some standard scales that you can measure overconfidence on, and it's like a checklist. It's like the depression checklist for anybody who's had a little bit of a psych evaluation there. It's a depression checklist. There's an overconfidence checklist. The fund managers that score highest get lower returns, which is a fascinating aspect. They love to promote themselves in those ritzy ads that say, you can do all of this and make millions of dollars for 10 minutes a day. So I think we all know the type of group that can say that, and perhaps they're completely self-deluded.
Yeah. Yeah. It's we don't want to, but look, it's out there. It's very prominent, and people need to be aware of it.
Let's look at the next piece of research, interoception. Now, this is where you are aware of the aspects inside your skin. Now, it's things like being aware of your stomach gurgling, being aware of your heart rate, being aware of that turning point in the markets when, oh my God, I've just lost money. You know, that sinking feeling that like somebody dropped you from a 10-story floor down to floor 9, that intake of breath, that interoception. Now, the thing is, I used to consider, because years ago, you know, you're supposed to be detached, Louise, and this research hadn't come out yet because it's fairly new research, that because I could feel all of those effects, that, oh my gosh, I'm not actually as good a trader as I thought. I do feel nervous. I feel anxious. I find that I can notice that within my own body, viscerally. This research has come out and they've measured floor traders and they've measured traders on the screen, and it's been interesting because it's a longitudinal study, so it's long-term study. Now, even screen traders, and it's just the same as with floor traders because floor trading doesn't really exist anymore, but if we are more aware of our bodily conditions, we are going to be better traders. It self-selects for people who have awareness, which is interesting. Now, I think what this does is it gives you permission to be aware that it's okay if you feel these things, but what you do with them next is the thing that matters. I'm going to pair this with another piece of research. Reframing is so important. So reframing that stomach gurgling into excitement. Reframing that heart rate into, I'm really on, so I'm focused. Reframing that feeling of dropping through the floor to, I have my full attention on the market. So let's listen to our signals, but reframe them in a positive way. I'd love to hear your thoughts on that.
For my trading plan for many years, would note every signal through the trades. Now, I was a day trader, so it was a little easier to do that compared to some of the longer term swing stuff. So my reaction times were everything. If I felt my heart rate increase, if I felt my stomach drop, if I felt ill, if I felt overconfident, it would all be something I wrote down and exactly what it is. And what I found through my data is little things that when I felt so unconfident in a trade, or I felt ill when I was risking the amount I was, or whatever it might be on this position, those were my best trades. So it was actually when I felt the worst about the position, and it's data, right? The data didn't lie. And this was over a very large group sample of trades. Those were my best positions. So what I learned was when I did get that feeling prior to a trade, I'm going to level up. I'm going to go more risk on. I'm going to really attack that market. And I did, and it worked, but I've over time learned what that feeling meant. And the feelings, funny enough, they started to change. So instead of my stomach dropping, I got excited. And then the data would change a little bit because I was getting used to it. That's a whole nother conversation for a whole nother day. But yeah, it's something that I think is important. It's a tell. A lot of people say ignore your emotions, put them to the side. I think that's the worst thing you can do. Is your emotions are going to try and tell you something. You just need to decipher what it is they're trying to tell you. And that's my outlook on it.
I'm really interested with that ability to be aware of your own bodily sensations isn't something that everybody has, but it is something that you can work towards. So I do think this is where something like a journal can assist. And that fact that you managed to write it all down so that you were basing it on data is fascinating. Do you know, I will just have a wee beef to you with this, is that there was a brokerage firm that I wanted to present this to, and they said that you can't because it's teaching people to rely on gut feel. This is not gut feel. This is this is a separate aspect. Of course, we can't rely on gut feel because that is not based on data. But if something like your awareness of your own bodily functions is going to assist you in becoming a better trader, then don't just take what I'm saying as being an intuitive way of being able to respond to the market. This is something that you can hone and that you can use in your own favor.
Yeah, it's something that I've put a lot of time and energy into, and it worked. So go away to those people, whoever told you can't do that, because I'm a big believer in it. And there's someone I know quite well as well that is designed a heart rate monitor that goes with your trading system, and if your heart rate upticks so much, they block your account from being able to open positions. And so there's a lot of technologies which are researching this thing as well, which I find really fascinating.
Yeah, the biofeedback aspect. Yeah, that's great. Now, let's have a look at another piece of research about overtrading, because this does tie into many of the things that we've discussed on this show, getting the right time frame for your own predilection and making sure that you are true to yourself so that you don't overcome something that is a part of you. Now, this is based on some fairly old research because it was back in the 1980s. However, it has been replicated time and time again. So I'm going to quote the original research, Barbara and Odine. They found that men traded 45% more than females, but they earned 1.4% less annually. So the gender gap was even wider among single traders. Men traded 67% more and earned 2.3% less. Jordan, tell me about your thoughts about males versus females with trading and overtrading.
I definitely think there's male tendencies that I see. And from what I've heard as well, a lot of the female traders do tend to outperform. And we even see that sometimes in the firms that I've worked at over the years, and people that I've spoken to, is we do see an element of improved performance. There's different things that make me question different things as well, because whenever we see kind of large hedge funds, trading floors, things like that, there doesn't seem to be many females there. But then if the data is suggesting that females perform better, like, why aren't we incorporating that a little bit more? So there's always this back and forth I have. I'm fascinated by it. I've got my own opinion on why I do tend to think that females can be a little bit more centered when it comes to making decisions. And I think males more ego driven. We're quicker to react in that essence. So I think there's definitely elements. I might be just barking up the wrong tree there, but that's just an opinion. But yeah, I see the gap from time to time. I know some females in this line of work, one that I'm chatting to right now, which do fantastic, and there's others that I could literally list off a name which really, really do well, and they never seem to go off focus. At least I'm perceived. They always seem to be so centered and so focused. Whereas when I deal with a lot of male traders, I see we jump a lot more.
Yeah, interesting, isn't it? So I think there's a few different aspects to this research. Barbara and Odine did a lot on this area. So women seem to be more risk averse. They need more confirmation before they enter a position. They don't respond as well to an ambiguous outcome, which is, of course, that's what the trading world is. However, when this is actually looked at in detail, sure, they take longer to start trading, but because of that risk aversion, they are more cross the T, dot the I type of person. So their setups are actually more complete. They are less shoot from the hip. They have got an overwhelming need to talk, which I just find these weekly sessions with you fantastic, Jordan. It allows me to share my number of words, but it is also something to be aware of and not to hold yourself back. If you're a female in the markets, don't let yourself feel that because it's a male-dominated industry, you cannot achieve. That is something that I think every female should be aware of, that you have your place. There is no reason for you not to achieve in the markets, and there is no reason for you to feel that you have to hold back when it comes to trading. The top traders that I've trained are females, and the guys that are the supporters of the women, I am just so in awe of, because why can't we do this? Why can't we say we can all learn from each other regardless of our gender? I think it's a really great way to go. Now, Jordan, we've covered a lot of topics here and we have run out of time. I love your thoughts and thank you so much for letting me put you on the spot yet again. So until next week, happy trading.
Thanks, Louise.